Well, good afternoon, traders. And I want to touch on gold today because we've just seen such huge volumes going through in terms of flow and in terms of what activity and talk in the trading floors. It's all been about what's happening with gold, where's it likely to go, and whether we continue using this in the idea of currency debasement. And I think, specifically that's what gold's been used for. This idea that we're seeing lower nominal and real bond yields has been very much the driver of gold. And actually, if you have a look at what's been priced into various swaps markets, if you have a look at this from the Bloomberg chart, you can see 95 basis points of cuts now being priced in over the coming 12 months. In Europe, they're expected to take the deposit rate down even further into deep deposit negative territory probably in the September meeting. We'll see a change of guidance in their July meeting. The market's expecting 16 basis points of cuts being priced in. Here in Australia, the market's pricing in 61 basis points of cuts over 12 months. There's even a conversation about whether or not the Reserve Bank will start doing residential mortgage-backed securities purchases and expand base money for this term known as quantitative easing. And in Japan, while we didn't see much in the Bank of Japan meeting yesterday, more is expected, and the market's seeing deeper negative deposit rates there from the Bank of Japan and 16 basis points of easing priced in. There's not too many parts in the world where the market is not just expecting one or two cuts, but an actual easing cycle. So in that situation, we have seen fixed income working very, very well. Whether you're looking at the front end or parts of the curve, we've seen those nominal bond yields moving much more aggressively than what we've seen through inflation expectations, and therefore we've seen real yields moving lower. And in that environment, the fact that gold has no yield has been yield in itself. Gold has its store of value from that situation. But also we can see gold as a currency in its own right and effectively being used as that kind of best house in a deteriorating neighbourhood. So quite often with gold, we'll look at gold and how it's performing in against each G10 currencies. And what we can see is effectively gold rallying really since that move that we saw from the 30th of May. We've seen gold really moving up very sharply in all currency terms. If you look at it against the dollar, the one that most people look at there, it's up nearly 8%. Against the yen, it's up 5.5%. And against the Swiss franc, also two very defensive currencies, up over 5% as well. Then we go against some of the other currencies which have seen a decent move lower, and we can see gold in Aussie dollar terms up 7.6% and euro terms up about 6%. So the fact is that gold and some of the other precious metals is moving up sharply in all currencies. So the gold is effectively being used as a currency in its own right and that best house in a bad neighbourhood, but also moving in this line with lower real rates. So this idea that we're seeing central banks, this race to the bottom, potentially using their currency in this kind of currency war term is why gold's continuing to move. So I think what is a catalyst for traders out there, if you are positioned long in gold, what you want to be having a look at is this argument that the Fed are not just going to cut in July, as something that the market puts that as 100%, but they could actually go 50 basis points. Now, what's going to drive them to move there? Well, of course, we're keeping our eye firmly on what's happening in the G20 meeting at the back end of this month. If there is no feel-good factor between Xi and Trump, and bear in mind what the Fed, the ECB, and also the RBA have said is they will act appropriately, meaning they're looking very closely at the G20 meeting. If we do see no feel-good factor and no signs of convergence, we will see gold rally on the idea that potentially we could get a 50 basis point cut. If we go out to the economic data, we've got an ISM manufacturing, that could be reasonably influential. But then we go into what we're seeing through the non-farm payrolls numbers, which has come out early July, I think it's the 5th of July. We get another weak number there. Again, the idea that we could see a 50 basis point cut will solidify, and US dollar gold will obviously come under pressure, or will obviously rally in that situation. We are watching what's happening in the dollar, and if you look at the dollar index daily chart, you can see it trading through the 200-day moving average. We're testing last week's low. We're also broken that medium-term uptrend there, and it does look like if you're choosing a currency at the moment, that US dollar denominated gold could be the one. But again, it really depends on those catalysts that I talked about. If we believe there could be a really good chance of a 50 basis point cut, then gold's got downside, and I think US dollar gold in that situation will work quite nicely. So gold's working as a hedge against real rates and falling in real rates, and also currency debasement in that terms, and the idea that potentially we could see currency wars creeping up towards the back end of this year and maybe into 2020. But I will say that gold is a little bit overloved at this levels. We can look at a number of factors. One, the RSI's 81.3. That's just showing that the rate of change has been very bullish. But it tells us that in terms of where the risks lie, that perhaps there's some of the heat may come out of this at the moment. But I wouldn't go and short gold just because the RSIs are high. It's telling us that the rate of change has been very bullish. We can have a look at the options market, something that most people don't look at too closely. But I think if we look at the deep dive there, we can see that the implied call volatility for 1 month has now moved to such a sharp degree relative to put volatility that the skew has become very, very extreme. We've got to the sort of highest level since September 2011. So everyone's been buying calls, which give you the right to buy upside in gold, but we've got to some fairly clear extremities. If you have a look at the GLD, the gold ETF there, we can see the highest volumes coming through overnight yesterday since December 2018. So there's certainly a bid coming through there. And also, if we have a look at the Commitment of Traders report, which shows you every Tuesday the holdings that we see from managed money, effectively that sits at 129,000. It's not at extremities by any terms, but that's lagging data, and one would imagine that spiked up quite nicely from that point. So if we have a look at options market, there's a lot of love for gold. If we look at price action, there's been a lot of love, and perhaps we can see some heat coming out of the market. If we see inflation expectations continue to move up a little bit, which we've seen through break-even levels, that may work against gold. But the power that's behind gold at the moment is very, very strong. And if we do see, these catalysts that I talked about, no convergence from the G20, if we don't see any idea that the non-farm payrolls number is going to be weak, if we see that coming through, the US dollar is going to weaken. Of course, gold will probably push through 1,400 in that situation. And we're probably likely to see a situation where Aussie dollar gold continues in this record run that we've been seeing as well. So definitely one to watch.